righty, good afternoon, everybody. Hope you're all doing well. Welcome to the start of the wonderful 3-day Memorial Day weekend. Hope everybody is doing well. Well, let's dig in. We're going to talk about the market. I think we'll start with a little bit on the news and the levels of the market and VIX and what's going on this week and what I'm looking at next week, what I put some trades on today, if so, what would they be? And then kind of move into a little bit how we look at the world of options, running an options business. And as of today, how I'm kind of looking at that. And then we'll dial into 2 or 3 strategies that I would be looking at to put on today or Monday. That's quite a task, isn't it? That's quite a stinking task to do in a few minutes here. But we'll give it a shot, right? And on this very quiet day in the market, very quiet day in the market. All righty. So let's move on here. So as far as the news this week, vaccine possibility, right? So Monday they came up with the potential vaccine and the market went up. And then Tuesday, it kind of wore off a little bit, right? Everybody figured, well, we probably can't come up with a vaccination in 24 hours. You know, it might take more than 24 hours to come up with a vaccination, and maybe it's not perfect, but it just shows how the market is reacting to news. Unemployment goes up. So a lot of different news. How many of you know where the market's going to be in 3 months from now? Who knows? That would like to share with us, right? A lot of different news. And what we do at Sheridan Mentoring, we do something pretty weird. We focus on what the market's doing today, what the market's giving us to do, and that's what we do. And we've been trading almost every week for the last 4 months, and we'll continue every week for the next 4 months with what the market gives us. Now, as we look at Apple, right? Excuse me. Let's look at SPX. What is the what's going on in the market? Was this week, other than Monday, this was a pretty range-bound market. Do you agree? Sideways. Very good for income trading. So let's just take a look at what we're seeing here, reality, how I'm looking at this, right? For those of you maybe who've been in the Brazilian rainforest, or maybe maybe you visited Pluto for the last 3 months, right? How many people realize that we're not in the pre-COVID environment? How many of you are aware of sane mind and body that we are not in this environment right now, right? You say, Dan, what is that environment? VIX maybe 12 to 17, very range bound. All right, we are not here, right? Do I think eventually we'll be back there? Yeah, sometime in our lifetime. I don't know when, but we'll be back there. But this is what we have to deal with, right? Obviously, it went down, but now we're getting some semblance of sanity, aren't we? And we basically, if you look at the last month, this is our reality, right? So what's the reality? The reality is in the last month, we've had a range, right? We've been in a range of between 28, I'm giving you rough here, right? 2,800. So here's what I'm operating off of, 2,800 to about 2,980. And I'm looking at a VIX of roughly 27 to 40, right? In this environment, since the Corona move started in the last 3 months, we have not been under 27, right? So this has been the range that has been determining the strategies I do. And this has been where we're at. So the price range. So what do I look at as of today? Today we're at 29.53 in the SPX, and VIX is at 28.69. So what do I look at? How am I looking at? And what will determine a couple things is I just look at we're in the upper end of the range, right? We're in the upper end of the range price-wise, and we're in the lower end of the volatility. Historically, is a VIX where we're at of 28 higher low. Historically, is VIX 28 higher low. Historically, a 28 volatility is high. But over the last 3 months, as we've been in the Corona correction, CC, Corona correction is 28 higher low. In the Corona correct, it's low. So this is what I'm trading now, right? Why? This is reality, right? This, right? This is a 6-month price chart, but this all is Disney World Magic Kingdom. We're not there right now. When we get there, we'll deal with it. So I'm dealing with, in Sheridan Mentoring, we try to deal with what's in front of us. I'm not saying there's not room for a spec move. Where's the market going to be in 2 or 3 months? But, you know, it's like, how do you live your life? Do you live your life today, or do you put your life on hold and say, what are you going to do in 3 months when you go on vacation and everything's, no, you live today. And so we, you know, most students in Sheridan Mentoring are trying to make a certain amount of money per week. So if you're trying to do that, you have to be focused on what's going in and out. Does that make sense? Because we're actually craftsmen and trying to make money every week, you have to focus on what's in front of you, right? Not where we're going to be in 6 months, because that's not going to help us make money in the next 6 weeks, in the next week, right? All right. So that's kind of what's driving me right now until we break out, right? Either, let's say somewhere near 3,000 on the upside, the 2980 to 3,000 on the upside, or under, let's say 2,800 or something like that, and we get out of this range, that's what I'm going to deal with next week. Does that make sense? Dealing with reality. Dan, why do you like to stay in reality? I don't know, crazy. So with that being said, one other thing I want to mention is before we start dialing into strategies, how are we looking at this as a business? As a business, I kind of throw things into 3 parts of a portfolio. So in other words, let's just give you an example here. As of today, if we were hypothetically trading a 100K portfolio, right? How would I separate it and what strategies would I do, right? So first of all, long portfolio, which is going to be neutral to bullish, right? Neutral to bullish. And that would be, what are strategies that are neutral to bullish? What are strategies that are neutral to bullish? So I already mentioned the volatility, VIX range 27 to 40. So what are strategies that are neutral to bullish? Iron Condor is not really neutral to bullish. A diagonal, right, which is like a covered right alternative. A covered right is neutral to bullish. Not credit spreads, put credit spreads would be neutral to bullish. Covered calls, neutral to bullish. Leanna says, how can we be bullish with 40 million people unemployed? Well, so Leanna is basically saying in her retirement account, she would be putting 0 money into neutral to bullish trades. Is that correct? 0 money into neutral to bullish. But let me ask you, are there people in the United States in the last month or two in their retirement account that have found some stocks or indexes when they were at some lower levels, buying them? Were there people doing that? Yes or no? Yes or no? Absolutely. So in the long portfolio with us at 29.53 at these levels, we're 13% off the highs for neutral to bullish strategies. What percentage of your options portfolio would you put in long portfolio? Give me your percentage and I'll give you mine. Right? You give, I give. You give, I give. What would percentage on a 100K portfolio would you put into neutral to bullish strategies today? Sam says 35. Leanna goes from 0 to 20. Mark says 50. Dave 35. Okay, and those are all, there's no right or wrong, right? I would probably go, I think 30 seems a good number. On 100K, I'd put 30 in the long portfolio. How about income? This would be more range-bound strategies based on probabilities and decay. Tell me some range-bound strategies that benefit from probabilities and decay, short-term and long-term. What are some range-bound strategies? What would go in this part of the portfolio? Iron condor, flies, double calendars, double diagonals. Yeah, that was the types of strategies. What percentage would you guys go off do? What percentage on 100K would you guys do? Sam says 35. Seth 50, Eric 50, Gary 35, Dave 25. I would be 50, but I'm going to go to 40 only because even though we've been range bound, has there still been turbulence in here with big candles? Even though it's been range bound the last month, has there still been turbulence? Yes or no? Yes. So my comfort level isn't hugely high. I don't know if that's good English, hugely high. So I'd go 40, right? Spec part of the portfolio. What are spec part of the portfolio? Spec part of the portfolio is you wake up in the morning, take your pajamas off, take a shower, breakfast, and you say, I have an opinion based on charts, late night pizza, Fibonacci, Fibonacci, fundamentals, whatever information you have. That's spec, right? Unusual option volume. That seems to be a buzzword these days, doesn't it? Everybody's trying to unusual option volume, but there's many different. But that spec, I have an opinion. You say, what part of the portfolio would go in there? For me, I'm not that good at spec, right? But strategies would be right. Buy a put vertical, buy a call vertical, buy a call, buy a put. Spec strategy would be buy a straddle, buy a strangle, do a back spread, but different ways to express your directional calendars, directional butterflies, blah, 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 right? But I'm not that good at it, right? I'll be honest with you. On spec, I might put 10. If you're better at it than I am, you might put 30, right? I mean, this has been for someone who's good at charts. And so I think this market, you get some ranges and, this would be the time to put more, but I'm just not that good at it. So I put 10, right? So 30, 40 is 70 and 10 is 80, 20% in cash. And so, but again, you say, Dan, why do you go over this? You got to have a plan, but this is intentional. This is an intentional plan, meaning now, does this translate into 442 strategies? No. Right? So I might do, typically on this, this whole thing, all of this, if you look at all of these, and let me just say this, a lot of people in Sheridan Mentoring may only trade income part of the portfolio. Some may trade income and a little spec, some may trade income and a little bit long portfolio, or mostly income. But the point is, if I make a plan, it's intentional, right? I'm intentionally every month gonna utilize this. Say, why? Well, let me ask you a question. If your goal is to make $5,000 a month, can you make $5,000 a month without trading? That's a tough question. Can you make $5,000 a month without trading? Someone say no. I know it's a horrible question. No. So you got to have a plan, right? You got to have a plan. You got to do X amount of contracts. It's not going to just happen, right? And so that's what I do. And as the market changes and volatilities, I'll change my allocations. Now, and we'll look at a couple strategies within it. Now, let me just say this. If I'm just doing, we have a lot of students that just will do income portfolio, and this might be, so Dan, how many trades would you be doing here? Maybe 2 to 3 at a time. Have no more than 2 or 3 trades on at a time for the income portfolio, 2 to 3 max, right? Spec, maybe 1. Now just put a spec trade on, maybe 2. And long portfolio, maybe 1 or 2. So we don't do many, but income, I'm just doing 1 to 3 max. I won't go over 3. Now, why do you think we keep the trades? And I'm only doing these trades in very liquid vehicles. We're basically in SPX, that's number 1, RUT, and then some very liquid stocks, Apple and Amazon, and some others. And why do you think we trade 3 to 4 trades or 2 to 4 trades and not 72 trades? Why do you think? Yeah, there's not that many people I know that's good at doing that many trades, right? I mean, there's a few. I'm not saying people can't. I know a couple people who can do 50 trades at a time. I'm not one of them, right? Plus, I do think if you just trade a few vehicles, like I'll just trade SPX and maybe a couple liquid stocks, right? That's it. SPX is well diversified. It's got 500 stocks in it. And I'll trade a couple of very liquid stocks. Apple is the most liquid stock in the history of the universe since Cleopatra, right? So I'll trade Apple. Amazon is a higher price than RUT, a little bit lower than SPX, but, I'll trade these, but I like SPX. It's just more diversified, right? I'd rather put more capital in something a little more diversified than putting a lot of capital in Amazon or Apple. They're still stocks, right? They're still just one stock, right? Even though they're they're well capitalized. So with all that being said, now I dial in the strategy. So today I may focus on just maybe a trade that I'm looking at in each of these, right? But what I want to get across to you folks, this is a business. Most of you, what's peddled in the options industry these days? Are plans peddled? No. Are trying to get you to be an independent trader peddled in the income or in the options world? No. What's peddled more? What's peddled? Well, get rich quick, but it's trade based on, it's all speculative, right? Right? It's based on option volume or based on charts, buy and sell. Now, why do they do that? I mean, they do that a couple of reasons. One, because that's what you guys want, right? I mean, they wouldn't demand and supply, right? And I get it. Part of it is it's simple, right? Right? Apple going up by call, right? Or something like that. But I think it's very difficult for a long period of time, 3-4 years, to be consistent picking the direction of the market, unless you go with a trend. I mean, we were in a bull market for 8 years. So I do think you can do different parts of the portfolio, but I think you diversify, right? So diversification is important here and all that. Anyways, so that's kind of how we look at the options business. Now, so let's look at trades. So now, first of all, Today, are there any trades we'd put on today? No. Would I put trades on today? No. Why wouldn't I put trades? I'm not crazy putting on trades on Friday to begin with, but especially in the coronavirus thing. 3-day weekend, especially for short-term trades that have more price risk. But in the income part of the portfolio, the only exception, if you said to me, Dan, under what scenario would you have put trades on today? If VIX was in the high end of the range, like, we're at 28 in VIX. If VIX were at 40 or 45 today, would I put on 40, 45 day trades like a butterfly or an iron condor? Absolutely. Because those can withstand, if we were to gap down 100 or up 100 Monday, those can easily withstand that when you're that far out and it got a nice premium. But at 28, we're in the lower end of the level. I just don't like going over the weekend with it. And again, if you do a 40-day trade, you're not getting that much time decay. So is the little bit of time decay you get going to offset something weird can happen? I mean, let's face it. Can you almost bank on when Tuesday comes that we're going to open up or down 60 points? Yes or no? Can you almost bet on Tuesday morning we're going to open up or down 60? Yeah. I mean, it's normal. Now, Wayne says, how about short-term SPX weeklies, 2 to 4 days? Today, Wayne, are you talking about? So Wayne is saying, today, would you put on a 2 to 4 day trade that maybe expires like Monday, Wayne? All right. So Wayne is saying, maybe put a 3-day trade on that expires Monday or Tuesday. Thank you, Mark. Close Tuesday. Now, if Wayne was in Sheridan Mentoring or close to me, or I had contact with him and he did that, I would get in my minivan. I would drive over to Wayne's house, right? I'd be like, do you remember watching the Andy Mayberry series? Who is that guy? Who remembers an Andy Mayberry, Ernest T. Bass? Anybody remember Ernest T. Bass? Right? So Ernest T. Bass, what did Ernest T. like to throw? What did Ernest T. He used to like to throw rocks. So what I would do is I'd come over to Wayne's house and his wife or someone say, Wayne, someone's throwing rocks at our window. Oh, it's that crazy Dan Sheridan drove all the way from South Carolina to throw rocks at me. And in the rock, there's a little bag, there's a little note, Wayne, don't do it. Don't do it. And his wife says, Wayne, what's he telling you to do? Honey, he's telling me don't put on a short-term trade or he's going to throw some more rocks at us, right? So I'm not crazy about a short-term trade that expires Monday over the weekend. Now, if Wayne said to me, hey, Dan, how about after the market opens Monday, all right? Monday, would you put a trade on that expired Wednesday? Yeah, I might put that on and you could put it, maybe I would consider that the spec part of the portfolio. No problem. A little bit. But again, when you're doing that, I would do smaller size, right? There's not many trades I wouldn't do, depends on the size. So let's start with an income trade. So when it comes Monday, what am I going to look at Monday when we open? Depending or Tuesday. I keep saying Monday, Tuesday. I'll probably look at something like this. We've been in a range, barring, let me just say this, barring as long as we're still between, say, 2980 to 3000 on the upside and 2850 on the downside. As long as we're kind of in that area, what would I do for an income trade on Monday? I would probably, or on Tuesday, right? I'm going to keep saying that. Tuesday, I might look a couple different trades, but one of them, like a short-term trade, a little bit, which they've been working great over the last 3 weeks to a month. So Tuesday would be the 26th. So I would look like something like this. This is what we've been doing a lot lately. So I would look at something like this. Now, again, a little bit, I'm just telling you some stuff we've been doing, but this is something I'd be looking at. You can go a little further out. I don't normally do stuff that expires in 5 days, but I'll explain to you why. I've been doing a little bit of this. Now, am I telling you not to do it if you don't know what you're doing? No. I'm not telling anybody. I'm just telling you just sharing what we've been kind of doing. So it would be like this. So this is something that I would pop up Monday, sell the May 29, and buying. So May 29's on Tuesday will be what? 3 days or 4 days? So somebody said, how many days for usual income trade? Good question. So again, in the plan, when we're doing the income part of the portfolio, so according to our plan, we had a hypothetical 100K portfolio. What percentage did I put to income? What percentage did I put to income? Who remembers? 40. So we have 40,000 of 100 devoted. If it's a 100 grand portfolio, you could have a $10,000 portfolio. $10,000 portfolio, 40% would be 4 grand. $100,000 portfolio, 40% would be 40. So as a general guideline, and I'm giving you a general guideline, how much of that 40 grand, how would I break it up into durations? I would put out of the 40 grand, 70% into durations 30 days out or more, 30% of the duration into trades 14 days or under. Is that clear? I would diversify the duration. Now, lately I've been doing more short term. And as long as we stay range bound and stuff, I would do continue. But does that make sense? So I'm going to talk about a 4-day trade here, right? I'm going to talk about 4-day trade. Dan, is all you do is 4-day trades? No, I just said, right? Out of my income allocation, I would do 70% 30 days and out and further out, 30 to 45 days. And I would do 30% into 5 to 14 days. Does that make sense? Is that understandable? For diversifying your duration? Yes, no? Yes, no, yes, no. Is that understandable? Okay. So this trade is going to be about a 4 to 5 day trade. I think I answered, is that all we do is 4 or 5 day trades? No, I don't do many 4 to 5 day trades. Why are you doing this? They've been working lately pretty good. And so in the short term, let me explain to you this. So I'd be selling the May 29 and probably buying something like this, either the June 1 or 3rd. Even though the volatilities are low over the last 3 months, historically, they're still high at 28. So I would keep the distance between my short and my long, maybe 3 to 5 days. And so I might go June 1, just give you an example. So I'm buying the June 1, selling the May 29, and just doing at the money in the calls, right? Dan, what is this called? It's a call calendar spread. So if you look at this, how many of you recognize this type of a graph? This is a short-term call calendar spread, and the short expires a week from today, May 29th. That's it. So Dan, what are you doing? I'm giving you an example of stuff we've been doing lately. This is show and tell, right? So if we're at, so let me just talk about what we're doing here. And this is something I would be looking at maybe Monday morning, Tuesday morning. So let's talk about this. All right. So if you look at this trade, so here's what we're looking at. Yeah, at the Tuesday morning at the money price. So if you look at this trade, let's talk about it. Dan, what are you doing? I'm buying the June 1 at the money, 29.55 calls. I'm selling the May 29, 29.55 calls. It's costing, let's just call it for all essential purposes, $5. So $500 is our cost. If the world ends Monday or Tuesday and we go to zero, or if the market opens up 1 billion points, the most we could lose is the debit, right? So that's the trade. Right now, we're trading at SPX is at 29.53-ish, and our strike is 29.55. What is a calendar? A calendar is simply buying a further out expiration, selling a closer in expiration, generally at the same strike. And if you do it at the money, it's more neutral. If I were to do it like at the 3,000 strike, it'd be bullish. If I did it at the 2,900 strike, it would be bearish. But who can answer in 3 or 4 words, how does a calendar make money? Right? This is the graph. This is the expiration graph of next Friday. This is how the graph looks today. This is the P&L. So on a $500 purchase, if we close at the money in a week, boy, you can make like buku bucks, right? So you make your money on time decay. If we pay $5 by next Friday, how can this go to, this $5 go to $15? How? Well, if we close at the money next Friday, whatever we sold the short for is going to what? What's going to be the value of the short option at the money in a week from Friday? Not that that's a likelihood. 0. But the June ones will still have 3 days to go. So they're going to be holding value. But that $5 debit or so will increase dramatically, right? Right? So you make money on a calendar as we're near the strike price because your shorts are going to decay a lot more than your longs because they expire earlier. Now, if you look at, this is the profitable area in green. That's how the graph will look at expiration. The purple line is how the graph looks today. This is just from Thinkorswim graph, TD Ameritrade. If you look at these two kind of goalposts here, we call these the expiration break-evens, where the expiration graph crosses 0 on next Friday, May 29 expiration. So if you look at that in a high volatility environment, which we're at, VIX near 28, your break-even or your goalposts are a lot farther away than if we did a calendar when the VIX was 17, before the coronavirus correction, CC. Right? So right now, with us at 29.53-ish, right? The expiration break-evens are basically 28 or 20, what is that? 3,004 on the upside, 2907. Did I do that right? 2907 on the downside. So how much is that in English? How many points till our expiration break even on the upside? We've got 47, about 51 points. And then on the downside, we've got about 46 points, right? So 46 to 50 points from the expiration break evens. Now, let me ask you a question. Does everybody get that so far? So between now and next Friday, we make money if we're between these expiration break evens. Does everybody understand that? Now, how long would I stay in this trade, right? When I put it on Monday, right? I would look to stay in this. If I put it on Monday and expires Friday, I'd be looking to stay in this 1-2 days maximum, right? 1 day to 2 days maximum. And you say, Dan, could you get your money out of there in 1 or 2 days? Generally, you can, right? Again, if this is costing us $500, here's our time decay, and those numbers go up, quite a bit. This is the time decay today. Let's look at what the time decay will be on Monday's date, all right? So when we look at this Monday, if I put this on, Tuesday's date, the 26th, the theta, what's the theta now? When I put this on Tuesday morning, the theta more than doubled. Can you guys read that? What's the theta? Can you guys see that? It's about 80 bucks. Even if the debit, which is $5, goes up to $6 debit on Tuesday morning. Let me ask you a question. 1 day of theta is what percentage of our capital? 1 day of theta is what percentage of our capital? If we get 1 day of theta, what do we make? Dan, I don't get it. 1 day of theta is $79. What's 79 divided by 600? Whatever that is, 13 to 14%. Do you understand a little bit how the possibility you can get out in 1 day? Yes or no? Does that make sense, how you can get out in 1 day? Yes. All right. So even though the expected range over 5 days, or, the expiration break evens are 50 some points, right? We're only looking to stay in this. How many days am I looking to stay in this trade? If I put it on Monday, I'm looking to get out of this by 75% Tuesday, 100% by Wednesday. So what's an expected move for, let's say, 1 day, right? If I put on Monday morning, what's an expected move in 1 day? Well, how do you figure that out? I take 29.53. What's that? The current price times, this is a number that represents the volatilities that the calendar is trading at now. So I put times 0.20. It's a volatility that represents the trades I'm doing, times 0.052. What's 0.052? That's simply this calculation. 1 divided by 365.25. And take the square root of that, and you'll get this for a 1 day standard deviation or expected move. What if I want a 7 day standard deviation, or what's the expected move over 7 days? Instead of putting 1 divided by 365.25 square root, put 7. So I'm expecting to be in this trade 1 or 2 days. So I'm interested in the expected range or standard deviation over 1 or 2 days. That's it. So if this is the 1 day, right, and I take my calculator and I take 29.53 times 0.20 times 0.052. Thank you, Jim. Yeah, it's about 31 points. So if I put this on Monday, the expected move is 31 points. What does that mean in English, Spanish, and Norwegian? It means if we're at 29.50, which we are now, let's say we close at 29.50. What we're looking at, or let's say we put this on Tuesday morning at 29.50. They're saying there's a 68% chance. Basically, I'm going to round this because I could do math better on 30 than 31. There's a 68% probability we're going to be between 29.20 and 29.80 over 1 day, right? Now, anything can happen, right? And again, I'm not putting it on going over the weekend. Say I put it on Monday. So if you look at if this, once I put it on Tuesday morning, if this is the expected range, if I put it on when we're at 29.50, well, there's a very low probability we're going to go through the expiration break evens in one day. Does that make sense? Right? So the probabilities of us going through our break evens in one day, it ain't, you know, probabilities are against it, right? Now over 5 days, yes, but we're not going to be in it that long. So anyways, that's a little bit behind the scenes of a calendar. And obviously that's part of it. Managing it's important. And all I'll say with risk management here for a second, we don't have time to get into a lot of adjustments, but the bottom line is, you know, a trade like this, I'd put on a consistent basis. If I'm looking to make, let's say 10%, and let's say right now it's $5. So let's say Tuesday morning with time, it'll probably go up to close to 6, maybe not, depends at the money. But let's say it's $6 and I'm trying to make, so it'd be a $6 debit. If I'm trying to make 10%, I'd buy it at 6, try to sell it at 6.60 credit, right? And if I don't want to lose more than 10%, if this goes under, let's say under, so this would be, if I sold it for a 6.60 credit, if I bought it at 6, I'd make 10%. I mean, you could do it for more. I'm just giving you an example. But, and if it goes under, if I lose 10%, that means if we go under 540, I'd get out of it. You know, it's just a basic risk management, right? We could talk adjustments and other stuff, but you got to have some kind of sensible plan and stick with it, right? What time would I put this trade on? I'd probably put this on sometime after the first hour and a half of trading, right? Somewhere around probably 10:30 Central, which would be 11:30 Eastern. Let the morning activities shuffle their way out. Ileana says, why not put it today? What was my answer? Why not put it today? What was my answer? Why wouldn't I do this today? Well, there's 3 days of risk. If Leanna puts this on today and we gap up or down 60 points on Monday, right? How many points did we gap Monday of this week up? How many points Monday morning, last Monday, did we gap up? Anybody remember? Anybody remember? 60. Okay. So if we open up or down 60 points, not that this would get blown out of the water, but would we be happy with this calendar on? If we opened up or down 60 points? No. And Mondays have had a history of moving. So that's why I would not put it on over the weekend. Right? But Dan, what if it doesn't open up or down 60? Well, it's not worth the risk to me based on what we've been doing. So anyways, folks, good news and bad news. Good news is we talked about the business. We went over one strategy a little bit in detail. The bad news is I don't have time to go over the other stuff I was going to go over. We'll save that for next time. One thing I want you to look out for this weekend, a couple times a year, we run probably our biggest online class sale discount of 25%. And I think it starts today. You just go to Sheridan Mentoring and click on the banner that says Memorial Day. And that'll give you some information. But we're running this sale from today, which is Thursday. No, today's Friday. Through, Johnny, is this run through Monday night? When does this stop? So Tuesday. And so check that out. If you're interested, this is nice about our online classes is they're in detail. You know, our online classes generally will go, 6 hours of material, and they're very practical. These are strategies we do, lots of live trades, practical. So if you're looking at practical, something you could do, I think these would be a huge help to you. Again, folks, we'll see you next time. We'll probably do a free webinar next Friday, I would imagine. And we'll go from there. So take care, everybody. Check out SheridanMentoring.com and check out the classes and the great sale, 25% off. See you later, folks.